Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here on December 8th, 2020 with the live Forex market analysis for you. And before we get into it, I just want to pull up our disclaimer to remind you that this webinar is for illustrative and educational purposes only. So with that being said, we're going to give you one quick plug real quick, besides reminding you to subscribe to our YouTube channel, Forex Trading Unlocked. Also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And we are mentioning that book because we have some of those patterns that we're going to see in our live analysis. We have the Forex-Trading-Unlocked.com website pulled up with the workstation page, and we have the euro already laid out here for you. Now, last week we had on Friday a dark cloud cover sell signal. That's something you can learn how to trade in that book, High Probable Japanese Candlestick Patterns. Right here around the high there at 121.75, that is our bullish breakout level. So right now we have a short-term sell signal above here. This is where our stops are resting and looking for a reversal of fortune should the market get above there again. One thing to keynote, pay attention to, is that we are closing in on Brexit. We have a midweek deadline for the EU and the UK for their final breakdowns for the moving forward, with the UK separating out of the European Union. So there's going to be new trade deals negotiated next year, but the first stages and phase is marked with December 31st, when their sovereignty is regained completely. And we have a midweek deadline for a couple of other negotiations that, because of the coronavirus, are being held up a little bit, but they're still pushing on making those dates happen. Our downside target area here is down to this 195.57 level, all the way down to $1.1818. These are the key pivot points that we're looking for a corrective move to slip to. It's not overly bearish, but considering that we've had a nice run up in November, it's not unlikely to see us at least fall back to around $1.20 down to this $1.1957, where it's the higher part of our downside target area. You might find some good support there first before the market probes lower. It could also be a very good bouncing point, especially because the slope of this rally is pretty steep. Now, one thing you want to keep in your mind is that in November, the low here was $1.1602. The high on Friday was $1.2177. There was more of a range in 3 weeks in November than there was in the whole year before coronavirus in 2019. So the euro has had quite the volatile year, just as all the currencies have. Right now we are looking at a short-term sell signal. Now, something that confirms and lines up with our sell signal on the daily is the hourly chart. We had a short-term hourly sell signal that was triggered yesterday, and it had a nice little slide coming down this $1.2110 area, which is where the market's kind of hovering right now. This is an area that had been resistance and then had become good support. As you can see from the past two trading sessions, it's been hovering right around that level. It only dipped for a very brief period below that. Sustained trading under there, though, however, does have us at this downside breakout level of $1.2109, targeting this $1.2012. Now remember, $1.2012, that comes in above this $1.1957 area. So on an hourly basis, we definitely have the market targeting close to our daily downside target initiative. Now, what you want to think about when it comes to a trade like this is that on the hourly, it's giving us a good indication as far as whether or not that daily trade is going to hold up, meaning that the market had topped out here on Friday, and then you can see that the market had made a higher move low, lower move high, lower move low, and then made a higher move high. But if you're looking at a longer term sense, you go from this higher move high to a lower move low to a lower move high once again. So we're in a neutral to bearish phase on the hourly with a sell signal that was generated here. This is a bearish engulfing line. This is another high probable Japanese candlestick pattern that you can learn about in the book. And also remember to subscribe to this YouTube channel so you can watch these videos when we come out with these signals also. Then we had also earlier today where the market had basically found support yesterday and had been going sideways, tried to get a little rally going, and then we have this little bar right here. This is another bearish engulfing line, and you can see that it didn't take the market down high, but it made this rejected high here, which is a lower move high, and the market right now is in the early mid-morning trade for the United States as the European markets are closed down and the Asian markets are already closed. There's not much action going on with the euro. Most likely, this is going to be what you're going to see for the next couple of weeks, where most of our action happens overnight with the when the Asian markets come online, going into the European trade. As we come into the American market trade, especially with no results from the election yet, I would definitely assume that we are going to continue to have trades like this where we start to die once we come into the American hours, especially after 10 a.m. So once again, on the hourly here for the euro US dollar, we have a short-term hourly sell signal triggered yesterday. The market still is trending lower with lower move lows and lower move highs, and any trading below this downside breakout level of $1.2111, or excuse me, $1.2113 keeps this market in a bearish way, looking for a break all the way down into this $1.2012 area, somewhere around there. So once again, we have the daily back up here. Remember, we're heading into Brexit, and as we head towards Brexit, it's not out of the realm of possibility that this market starts to sag a little bit, come off of its strength against the dollar, and then just kind of hang around this area until we get through Brexit. So besides the American elections, you have the Brexit deadline, which matters for the euro US dollar. Any questions on that out there? Let's see, in our chat room, it doesn't look like we have anyone. Let's see, is there anyone, any questions on Twitch? No, we got some viewers. No questions, guys, about the euro US dollar before I switch to the British pound. All right, so we're gonna, and we can always go back to the euro US dollar if you guys have any questions. So we talked about the first half of the equation of Brexit. Obviously Brexit is affecting the British pound as well as the euro US dollar. Let's see, why did this, oops, let's get this right. Sorry about that. We're getting all thumbs today on the keyboard. All right, here we go. The British pound US dollar chart is here. Okay, so once again, the Brexit deadline of December 31st. You can see by this gray line here. Now, we had a sell signal triggered here on Friday as well. Now, this is a weaker sell signal that you can learn about in the book, High Probable Japanese Candlestick Patterns. And normally when you see something like this, we don't really treat it so much as a sell signal as it is more of an indication of a short-term pause in market direction. So we did have a big sell-off yesterday in the pound here. It came almost down to our $1.3212 pivot point. Now this target range here, this is what we're looking for as far as a correction. Now this market's been rallying for quite some time, since the end of September all the way into December. Much stronger of a move against the dollar. One of the reasons the dollar index has been beaten up so much is that the pound and the euro have stretched the trend over the past, especially month, when they are the two biggest weights in the dollar index. Dollar index hasn't really been coming off of its lows too much, even though the euro and the pound are coming back because the other currencies are strong. We'll get to that and see how that momentum is impacting the dollar index. There's a lot of divergence, so I would be careful of using the dollar index right now as a guide for any direction as far as the dollar is concerned. I'd look more on an individual market basis, especially since we have the impact of Brexit. So Brexit impacts the pound and the euro and obviously the US dollar in those trades. Not so much the Swiss, but then when you get to the other currencies around the world, which we'll see, you'll start to see the divergence that we're talking about. 2021 definitely, it looks like it's going to set up to be a very... So pound US dollar, again, once again, below this high of $1.3541. We're using that as our basis. I would say that, like I said, I'm not bearish this market, just a short-term correction. We came just shy of $1.3212 yesterday. We're still looking a little bearish on the day, but as a whole, not quite as weak as the euro is looking. But we can look at the hourly real quick and see what's going on. Yeah, see on the hourly, it bounced yesterday. We're more of a sideways trade right now, and I think unless it gets above the key level right here to pay attention to, I think you're going to still see the market sag and test support and make another run for this $1.3212 area. Now, once it hits, if it comes back to this $1.3212 area, especially if it starts to sag down towards $1.3105, that's a very good indication that this correction is being stretched. Once again, that way we'll keep this as a correction unless it has any real severe move to the downside, which I don't see it happening. But I think as you come into Brexit, and especially with the coronavirus lockdowns in the UK and also in the EU, that most likely this stretch versus the dollar is going to become a little harder for them to pull off. So let's look at the US dollar Swiss, since we don't have any questions on the pound, do we, guys? Nope. Got a couple viewers on Twitch and on YouTube. No questions about that. Okay, so we'll look at the US dollar Swiss. Now this is a big bear. We're waiting for a signal. Now this is where I get into this whole divergence factor that we're going to start to see, I believe, as we head into Brexit, the end of the year, and also as we set up for a direction for 20. Until the U.S. elections are locked in and completely resolved, I think the dollar is going to remain in a bearish way, because right now it's looking for a Biden succession to the presidency. And Biden presidency is definitely bearish to U.S. dollar, and it's not political. It's just that that's how things are going, especially with the things that they're talking about doing. So as flight to quality is concerned, remember that the U.S. dollar is number one, the Swiss franc and the Japanese yen are the other two flight to quality currencies globally. And the fact that the dollar is having a lot of trouble versus the Swiss, more so than it is versus the euro or the pound, that tells me that the dollar, there's definitely divergence going on in the currencies, and the dollar weakness is prevailing going as we go into the end of the year. Now remember, Brexit does not impact the Swiss. Okay, the Swiss franc, even though the Swiss is in the middle of the EU and will have its own negotiation with the UK, it's Switzerland. So it's not going to be much of an issue. Not to mention, as far as their whole import-export, what they have there going on, it's not as remotely as big of a deal as it is with other countries. Easier for them to stabilize and figure that out. I would be very cautious as far as the pound-Swiss trade, which we can actually pull up real quick. In fact, why don't we do that? GBPUSD. So just as the dollar is weak, now the pound, well, that's the pound USD. What do we do here? We want the British pound CHF. Okay, excuse me. So the British pound Swiss cross. Now this is interesting here. See how the pound is falling versus the Swiss and trending lower, and actually in a kind of an extreme way here. It's falling back towards this area where it was in October, and it had this lift going into November, and I think that mostly has to do with the fact that the pound was so strong versus the dollar. Now we noticed when we were going over the pound that it's going sideways. It hadn't made new highs, and it's going, actually now it's going lower. So that lays credence to why you would have a pound Swiss trade that goes lower. And as long as the Swiss is battering the dollar, unless the pound gets a very big rally against the dollar, I don't see the pound Swiss getting much of a relief either. So let's go back to this US dollar Swiss chart. So once again, we're waiting for a signal. This market's making lower move lows and lower move highs. That's indicative of what a lower moving trend. That's what you have to look at it is, and we don't want to be trying to catch a falling knife either. So even if we have a big turn of events, meaning a sell-off in the euro US dollar and even in the pound US dollar, don't think that the Swiss is just going to fall apart versus the dollar. There could be a complete divergence. It may get a bounce, but I would say any rally in the US dollar Swiss should be looked at as a correction should it occur. We had a major buy signal in November trying to plant support of dollar strength. However, with the lack of transparency in the U.S. elections, as well as the failure to come up with a true outcome yet with the Electoral College, I think that's very bearish to dollar, while the market is accepting itself a Biden win. Should things change, now that's just if Trump to become the next president again, that wouldn't necessarily mean the dollar is going to be very, very strong, but it would most likely indicate a dollar bounce. Now let's go to the US dollar Canada trade and see what's going on there. So we have no signal there. Now here's another market where it's kind of the same. This thing is a big bear, and we're waiting for a signal. There's just no reason to try and catch a falling knife here. So unless you're working your shorts and have gotten especially part of this last leg down, I would just it's hard to say that you'd be selling it in the hole. This market could continue lower, but I would look at any rally right now as just a corrective move, something like what you saw here in November, where we had a short-term bounce, made a lower move high after a lower move low, took out that low, which is indicative of what? A trending bear market. Right now, the signals are all there that remains the same. The U.S. dollar, Mexican peso now. They're talking about all kinds of tourism getting back to online and what have you. That's ironic that you could have bought the peso back here for, you would have been getting 22.5 pesos to a dollar just back in the end of September, and now we're below 20 pesos to a dollar. So it's getting more expensive to go to Mexico. So that's another thing where you have to think about too when it comes to trade, like the exchange rate as far as going to travel, especially for U.S. tourists right now, is getting very expensive. It doesn't matter where you go. If you leave the United States, it's going to be more expensive to travel now than it was a few months ago, let alone a year ago, which that's a big deal, especially when people are coming out of the lockdowns and having the financial hardships that they've had. So as far as U.S. consumers to travel abroad, it's getting less and less likely that you're going to see, except for those that are more affluent doing such travel. They're most likely going to stay within the United States. Does that mean that international tourism is going to come to the United States? Or they're going to see, you think if people leave the U.S., the demand for dollars goes down, the demand for other currencies it goes up. That could be one of the reasons why there's a lot of pressure on all these other currencies. People are seeing that ahead of time and trying to get a jump on the exchange, but I highly doubt that that's what's going on. So, and when you see a market like this, these thinner, lesser currency crosses versus the dollar, where they're gaining so much strength versus the dollar, that's where your dollar index is weak right now. It's not from the majors. It's from all the lesser currencies that are really pounding the dollar. Now, does that mean that this is overly bearish the dollar in the long term? Probably not, because as far as the peso is concerned, it was in a bear market before the coronavirus started. In fact, we can go to the monthly chart here and you'll see this. If you look at 2019, we're still above where it was when we started back here in 2019. But we're falling down into that area. Into, say, 16, 14 pesos to the dollar, you're looking at 2015 prices that we have. So obviously, we haven't seen this kind of pricing in quite some time. If we went down to 2011 prices, we get all the way down towards 12.5 pesos to the dollar. If it gets down to those levels, that means that tourism probably going to Mexico is going to decrease in a very, very big way. It also means that the Mexican economy that needs to be jump-started because of manufacturing and everything being put on hold because of coronavirus, they're going to have a very big problem exporting, meaning that even the price of avocados is getting very, very expensive. And I'm sure that people who like avocados will still pay for it, but if the price of avocados go up, that means everything goes up. So that means that manufacturing in Mexico probably is going to have a lot of issues heading into 2021. Now let's go to the U.S. dollar yen, the yen or other flight to quality currency, and see what's going on here. U.S. dollar yen, we're looking for a breakout. Most likely we're going to have an upside breakout here above 104.77. Below 103.65, this would be our downside breakout level. Now we had a long-term buy signal right here back on, November the 9th. The market has tried to make a run up. It made a lower move high, but it's come back and made a higher move low, and it's basing here. So like I said, unless it takes out this 103.65 area, I don't see it being bearish. I'm not overly bullish, but we're looking for a rally to challenge this 104.77 area, which if it pierces here, you got up to it once, twice, 3 times the charm, that most likely will touch off some stops and spark a rally that will continue to pressure up towards this 105 half area before it starts to run out of gas again. Now, remember we talked about divergence. The Australian dollar, US dollar, made a higher move high versus the dollar yesterday, even though it ended lower. So the higher move highs and higher move lows are still in play. Big bull waiting for a signal. We're kind of bearish this market, but then here's another thing you have to think about. If you read the book High Probable Japanese Candlestick Patterns, let's just say that the Australian dollar settles where it is right now today, and then all of a sudden we get a rally, especially one that takes out the highs tomorrow. that would be a very, very bullish sign for the Australian dollar versus the dollar. And once again, this is why you can't look at the dollar index right now as a signal for dollar strength or weakness, because Brexit doesn't affect Australia. Their supply chains that lead to China are now being rerouted because China is becoming more restrictive on what it purchases from them, which is not the normal position for them. So, and obviously markets adapt. So, and Australia started to do so, and being a big commodity producer, that's going to have benefits for other countries around the world, and especially around Asia, as they start to funnel off of China, which probably would be a good thing in the long run for them because they had too many eggs in one basket. But once again, like I said, should we see a close around where it's at right now today, and then if we get a rally that pops up and makes higher move highs tomorrow, especially with the close above the high right here, which is 74.53, a close above this level here would be a very, very bullish signal, even though this rally has been going on since the beginning. There's a big steep slope here, but this is very, very strong right now in the wake of Australia losing its business with China. Now, New Zealand dollar, US dollar, here's another one too. This one had set off a bearish engulfing line sell signal back here on Friday, and we have a downside target area of 68.78 all the way down to 67.37. Most likely the 68.78 will put the brakes on any type of corrective move before it starts to, if it really goes into a slide. I really don't think we're going to hit these lower pivots. I think that's going to hit more around the 68.78 and then get a sideways bounce. The Australian dollar and New Zealand dollar right now are kind of trading in tandem, and I think that's because the impact of the China blow has worn off in the Australian dollar. So both of these are gaining strength versus the US dollar. Can they maintain that? Excuse me. I don't know. Nobody does, but the slope of this rally is very extreme. I would be cautious when it comes to buying into the new highs. And like I said, right now we have a bearish engulfing line sell signal. So as long as we are below the high here, I would be very, very leery of trying to buy into this area. If you have already been riding your longs, I would be cautious here, especially use the low of yesterday. Anything below here would be a negative signal that only would add to the momentum of our bearish engulfing line sell signal here. So this sell signal, it has us only targeting really the 68.78 area. This lower area is more of an extended downside target range for as far as pivot points. The 68.08 being near old highs would also be a very strong support line. So should it dip below 68.78, I wouldn't expect too much more than that. So now remember, Brexit doesn't interfere here, and nothing else does. It depends mostly on coronavirus. Coronavirus hasn't been that big in New Zealand, and as long as it isn't, that's probably why it's maintaining its strength right now versus the dollar. So US dollar TRY, this is something that we're going to look at too, as far as how your lesser majors are holding versus the dollar. Now, the dollar has had a lot of strength versus this currency, and right now we're viewing this only as a short-term correction and a pause before the US dollar TRY makes another run. Now, especially if we have a sell-off in the euro and the pound, and if we get a sell-off in the Australian and New Zealand dollar, where you start to see a real true bullish run in the dollar, you can probably bet dollars to donuts the US dollar TRY will start to make a run for higher levels. However, this market has been trending extreme for months on end, and it's a very volatile market, but we like to use it as an indicator, and especially what's going on with the Iran deal coming back into play with Biden, I would say that you're going to see the US dollar TRY explode, meaning that there's going to be a lot of strength because Middle East tension, and especially what's going on between Syria and Turkey's involvement, it's becoming a powder keg. And if Iran does start to kick its heels again like it used to, then we're going to most likely see this continue to rally. So might be mindful of that. Let's go back to the Euro US dollar real quick and see what it's doing. The Euro US dollar is slightly positive now on the day, but not really doing very much. Let's bring back our hourly chart real quick to remind you that we are still in a sell phase here, looking for a test of $1.2012. If we get above $1.2141, that would be a reversal of fortune on the hourly basis, and especially If we sustain a trade above $1.2141, expect that to continue. But like I said, we have the daily sell signal, the hourly sell signal. They're still in play, and odds are that it's very likely that this $1.2175 area might be the short-term high for the rest of the month, even if it stays neutral to bullish. I think we've hit the top of the range just in the short run, just because of Brexit and things like that. So don't be looking at so much, like I said, if the Australian dollar and New Zealand dollar continue to rally versus a dollar, that doesn't mean that the pound and the euro will as well. And remember, the pound also was rejected on its new move highs. It's running out of gas, and I think with the lockdowns in the EU and also in the UK, it's going to be very hard for those currencies to maintain a bullish posture. So once again, if you want to learn how to trade these high probable Japanese candlestick patterns, oh, we have somebody on the chat line now that's saying hello. You got any questions there? Let's see. That's from Uchiha. How you doing? Hope you're doing well. Once again, the plug here is for the book High Probable Japanese Candlestick Patterns, available on Amazon.com and Kindle and Visions. But here, we'll go back to our live action screen here just for you guys. Do you got any questions at all? Let's see if there's any questions on any of the other chats. Any questions, guys? And we'll also go look at our YouTube. Anyone on that one? Let's see. I don't think so. Let's see if we have anybody on this chat here. Nope, no one's on that one. Let's bring this one around here. Okay, any questions? No questions there either. All right, so once again, we have our sell signals here in place for the euro, US dollar, and the pound, and the hourly is supporting it. So we'll see how that goes, and we'll have some more videos coming up for you soon. So you have a great day. Be careful. Remember to always use discipline in your trading. Always use stops and have a plan. Don't just go jumping in, and that's something you don't want to do. Treat your trading as a business, because trading is a business, and it's the only way to succeed at it. So with that, I'm Teddy Keckstead at Forex Trading Unlocked. Always check out your Forex trading needs at forex-trading-unlocked.com, and like us here and subscribe to us on YouTube. Thanks for your time. Appreciate it. And we'll have a live trading signal thing and some other stuff running it back up on